Good morning, everyone. Today is Thursday, May the 11th, and this is the Moneyball Morning Report for the Benzinga Pro platform. We are looking at the futures market here, and we just had the PPI, kind of a nothing burger, and then we had a crud that did not pick me up. Bummer. Sorry, I had a position to go long and it did not catch me. We had the PPI come in, nothing burger. Jobless claims come in, nothing burger. And so now we're looking at Jamie Dimon talking right now, saying that we need to ban short selling, which he knows brings the market down. So he might have a short position that he wants to cover. And talking about commercial real estate going to take down some banks, XYZ. So that being said, we are very deeply entrenched into the moral hazard, but we won't be talking about that this morning. What we are going to be talking about is how well we hold 4150. Now, I am of the mind that we are caught very sideways, and what a lot of traders are looking for is a shoe to drop or price action to get resolved. So a shoe to drop would be something else coming through the news that says, something else is broken. All right? Who knows? That being said, the levels, 4150, big number. As I mentioned early in the week, we are caught in a monthly range that is sitting right around this 4120 to 4150, thereabouts, giving us 30 points of noise, and then breaking below it gives us additional flow, and breaking above it gives us additional flow. That exhausts. So far, we're looking at doji on the week, right? But if we close the week holding 4050, this inside candlestick is really going to tell us where price action could expand from or break down from. And so that's 4172, all the way up to 4235, or 4114, all the way down to 4067. I see either of those as easily something to play. What's happening in the fray? We're building an inside candlestick on the day, but we also had an outside candlestick the day before, and this area right here was trying to break down. So in my mind, pullbacks into that 4143 area, I'm going to move it up. That's going to look like the line in the sand. If we can't hold this 4143, that's when we head down to 4130. But at this juncture, pullbacks are certainly buy zones. Could you try waiting for a dip and then watching it stabilize? Yes, of course you could. Remember how we tell when something's going on. 2 candles to the left. Where are we in relation to that? We tested lower but held, and then tested higher but faded, telling us that on either side we've got people controlling our range. And so this is my thought as well. I did earlier pick up this 4145 area, but I cut it at 4150 because 1, I had to do this, and then 2, I have no idea which way this market's going. What I am going to do is look very low on the edges, and I'm just going to sit and wait and see what happens. I am not jumping in front of any of this at this particular juncture. Jem Karzan suggests that we've got enough flow to keep traders bouncing into Monday of next week, where he feels like there's going to be a little bit of rolling action into the expiry of the range. Yeah, so that's that. Taking a look at the NQ, much more bullish, right? Everybody thinking tech's going to bring us out of the woods. Tech might if they didn't have constraints on the amount of operating capital and how much that capital might cost. But this is clearly a breakout formation. Pullbacks or buy zones. And so what might that be? Well, pull back to the opening tick, 13,400. Sorry about my allergies, you know how it is. Up into 13,462, and then, you know, we've got 13,550, and then 13,740. And so I'm going to put that 550, 560 right there as the line in the sand for us to move up to. If, per happenstance, the wheels come off the bus, we could test 13,370 and 13,330, both of which represent a fair amount of buying pressures. Look at this. This is a breakout formation that happened yesterday. If everybody moves in the direction of tech, we're going to have ourselves a pretty bullish day, in my mind. All right? That really is what I'm looking at. Last thing I want to look at today, I'm going to do a short one, is the RTY. This again is where the regional banks are sitting. Price action is sideways, really quite a bit more bearish inside of the prior week, inside of the prior day. Increased volatility, but take a look. Low, higher low. Let's anticipate another higher low. Let's say, hey, what if we get down into 1754? Listen, if it comes there and it's coming fast, don't have a limit order out, please, because it could fade monstrously. So don't do a limit order there. Let it fall through and then let it recover. If it makes a higher low or it holds the region near 1751, Bob's your uncle. You've got yourself in a bounce right back up into the resistance areas. And like I've said every single time, anytime we've had a savage bounce or a savage fade, traders have come in and pushed price action back into the compression zone. All right? And that is it across the board. It really, really is. Let's see what's going on. The dollar fading a little bit. Nvidia lifting. Everybody's on the Nvidia bandwagon, but they are trading 22 times earnings, and that may or may not be sustainable at this particular juncture. Gold on the rise. The dollar, as I mentioned, a little bit on the rise also, but fading this morning, and oil back down at our 71 region, which I find to be incredibly interesting. All right, let's go to the SPY.